Good morning, everybody. Maybe not such a good morning for some. I imagine so. No, markets are down here, and you can see where they're at right there, just above the 50-day moving average. I suspect it should. I mean that everyone sees it. Institutions know it there. Markets are going to be down from the high about 3%. Last time it did that, it actually pushed through it, as you can see. That may be what's in the cards here. A replay of that. It's somewhat similar type of not more of a just a one bar new high reversal. Just had a couple of days up there, which creates a topping pattern on the hourly and intraday timeframes because it went sideways for 3 days and then rolled over. Whereas, this one kind of like a 1 day and a little less obvious type of a top and reversal. And so as it comes down there, I'll be watching this 5-minute chart to see if it starts to bottom out. And since it's kind of just hovering down here at the moment, I'm thinking that it would spike down because it's not, bouncing. It had its bounce and it got sold into, and there's nothing to the left there. Let me just line that up. Yeah, so you can see it did. You can look at the cursor on the daily chart, and you can see where this high is pre-market. It rallied right into this prior pivot low. So again, looking to the left, that becomes a resistance reference point. It ran into that pre-market and rolled back over again. So sellers, even with a gap down of this size, they are selling the first resistance area. Let's see if I can see. I don't think this is updating here. Pre-market. I'm looking at TC 2000 to see if the percentage gap was updating. I don't think it is. Anyway, so that's what I would like to see. It come down here and tag that 50 MA, and then see if we get some type of a bottoming pattern for at least a short-term bounce. And so that, there'll be a huge void up above this unfilled gap. And one of the things we were looking for a couple of weeks ago was some type of short-term rally into the middle of August, or like last year, I think the high was August 28th, so give or take. And then it rolled over going into September, historically the worst month of the year. So we'll see how that plays out. This is a good start to that scenario. Moving, topping out here, as you can see, August 16th. Surprisingly, just to back up a little bit, it is a little surprising that this didn't follow through into, SPX 4500, where there was a huge open interest there. And in part, I suspect that is what's driving this down, as institutions were quite bullish, and they have been, seems like forever, making big bets that it would go up there. And that would have been an obvious place as a whole number for it to top out. And it didn't do that. So all those options probably getting unwound, starts to drive things down. And there's a big open interest at 4,400, which, it's going down below that now. So the whole thing gets exacerbated, and we'll see what happens. Just on a historical note, I was mentioning to Dan this morning, with 30 years from that 87 start of the crash on Friday, things are a lot different today, but it's something that may be getting talked about. When we think of time cycles, fib things come into play, numbers like 3, 5, 8, 13, 21, 34, blah blah blah, right? And in addition to time cycles like 15 and 30, sometimes those things play out. I studied them many years ago, and it was incredible when it actually happened, but that kind of led to the Holy Grail type of mentality and so on. But just an interesting phenomenon when those kind of things kind of play out. But I was just mentioning it. Most importantly, this 50 MA is a widely institutional followed moving average. It's a simple moving average. And we'll see if it holds there. Unfortunately, there's no support to the left. There's nothing there. It's into a void. Moving averages are subjective as reference points, but they become what's known as self-fulfilling prophecies. So inevitably, I mean, we'll see what happens today. We'll see if how far it bounces or not. And, going into September, maybe the stopping point is down here. And, we looked at this last night in the green room. It was late. It was actually after the close. So down here is about 3%. Down here, I have to adjust this. This kind of gives us, a measurement that what is looked at. Percent. No, I don't want the distance. Percent. All right. And so down there would be about 5%. Prior declines have been around 3% or so. Institutions have stepped up. And it was, over here, I don't know exactly, this was about 3%. I don't know how much this was. We could measure it, but anyway, there was nothing to the left, broke through the 50 and it reversed back up. This one came down to the 50. There really wasn't much of anything to the left. So, hey, this is kind of the same. Could say that about, you guys are saying so. No real institutional money. Believe it. I'm not following what you guys are talking about. Maybe in fibs. Probably not, McGraw. Maybe that is more along for the masses to get sucked into that kind of BS. Institutions do follow moving averages. They do very much aware of pivot lows and pivot highs and turning points and that type of stuff. Look, they've got millions, if not billions of dollars to hire some analysts to tell them where the prior turning points are. But we do know they do connect the dots and use trend lines and project, things into the future, that type of holy grail stuff. But in any event, we know this has been areas, it's gapping down, it's down 3%. So it's good information to see how it plays out. Qs, you can see here where they've been, 359. You can see 358 is the 50 MA, gapping down into that area. And so little alignment of different markets, but you can see this one's got a big rounding top. It led the way up, and now it's got a rounding top, and that is going to be a formidable resistance area. And so now breaking below these pivot lows, next level being 351. We'll see if it should get there. So taking note of subjective reference points, moving average, and pivot lows. As we do, we look to the left. We see what's under prices and mark those reference points off. Set an alert down there. Forget about it for today. It'd be surprising if it was to get there. I don't think so. But if it does, you may be looking at something else. Diamonds, 50 MA down here, same spot. So we've got a lot of different markets, big market indices, gapping down into the area of their 50 MA. Some not quite there. So we'll see. They get there. Transports, this was a good start to possibly seeing the markets go up. And now it's falling apart. We don't get pre-market data here, so we don't know what this is going to do. But anyway, it's probably going to gap down like everything else. We'll see where it goes. Interest rates, moving back down. We talked about this bottoming action here. So these were the things that kind of say, hey, maybe this S&Ps could get to 4,500, especially with that, bar at the high that broke the low and sprung back up again. So not only do we have those big open interests, we had technically a pattern that was a mini shakeout that supported prices going up, and we had interest rates bottoming out here, and all of that unfolded itself and kind of it fell apart. And so you have all of those things not working out technically, the options, and you've got a lot of institutions and traders, going in one direction based on whatever they're looking at, and it exacerbates, a move. So it's really not a big deal. Just looking at the uptrend and where things have happened in the past, it could become a big deal. We just don't know yet. So we'll see how things unfold. So futures, you can see, some buying coming in just above the 50. That just might be a, come in, things are okay, sucking in some buyers, who knows? But that 50 MA just has been a point where things have come down to here, poking through it. So why not believe or think that, that is what's likely to happen again? Qs, just tagged it, nothing to the left, sloppy stuff going on here. And again, topping pattern, getting a big red bar on the weekly here. And as we talk about wide range bars, so here's one of our concepts: wide range bars stay in the upper 50%. At the moment, it's not. Now, the other part of that is, does it close below that 50% line? It's just a subjective measurement, nothing to do with support or resistance. It's that historically, when you get wide range bars like this, they stay up there bullish and they break out. Now, this could turn into a bottoming tail bar today. And if it closes in the upper 50%, well, we say, well, this pattern is still intact. It's yet to be seen. I would be very surprised to see this rally and close back up here. This type of pattern just typically doesn't do it. Russell back down to the low of the trading range. And we'll see if buyers want to step up there again. If, again, this idea of going into September, it does raise the thought of, hey, is this a big top and prices are going to break down and there's nothing below here? So we'll see. Dow, just such messy price action. And then it tightens up and recovers. What a fake out on the bullish side. It's everywhere, down below the 50, below the pivot, 3 days down, nothing below here. So this type of a pattern, typically it results in stabilization and a move up where it rolls back over. That would be the typical pattern, especially one in which more so the NASDAQ, since it's got this larger topping pattern, of where it turns here and rallies up and then rolls over. And that's where you get the big downdraft, which could be a scenario for September. We shall see. Today is options expiration. So it'd be interesting to see if the whole thing was to really get more ugly today than this little bit of ugliness. Tomorrow. Thank you, McGraw. I guess I'm wishing for the weekend ahead of time here. Thank you. So tomorrow could be the culmination day. We looked at the Dow, it's on the 50, and Bitcoin, just kind of hanging there at resistance, had the strong move up. Oil, another sign of that weakness. And looking to the left, $62, ultimately maybe $60, the 200 MA. And gold up a little bit, but we talked yesterday about this coming into a point where the sellers would be. So far, it's holding up pretty well. Silver doing a lot of nothing for the most part. And all right, we don't look at this every day, but it's worth a look today, of course. VIX should be gapping higher. Came up to here yesterday. Same analysis, look to the left and see, a reversal point. So it should open up either there or above it. And if the selling continues, you should have an alert set up here, because I'm not going to be looking at this all day, but somewhere up here or $30, set an alert, do whatever you're trading. The alert goes off, should click off a thought, hey, we're probably near a low. NYSE tick, maybe it's probably going to open up under 1,000 this morning. It certainly should. So we may see NYSE ticks at minus 13, 14, 1,500. Things tend to go a bit lower on selling days. So if it starts off in an extreme. So a lot of things to keep an eye on as far as short-term lows, 50 MA on indices, NYSE tick, volatility index, all those things kind of help us to guide us, not get caught up in what might be the emotional part of it. So good luck today. All yours, Dan. What software do I use for scanning patterns? Raul's asked. TC2000. That's what we show in MT Live. And you can, check that out.
Greg Thane's asking about internals. Any comments there?
Yeah, they're close. Let's see here. You can see here on this page, yesterday they closed at 151. Breadth, sentiment is in these lower bands, but way far away from 1.2. Hasn't been down there in a very long time. So, today, maybe, being weak, tomorrow a turn. Internals, if today stays weak, it doesn't, whatever it does, we'll just look at what the numbers are. If these are both down below here and, we're down at the 50, everything I spoke about, maybe we're rallying back up tomorrow after whatever happens. We'll see. So we're close to an internal signaling a turn.
And that would be my ideal setup too, that we, we bounce a little bit, get some scalps, and then have another afternoon repeat like yesterday, get those things exactly where you showed. And then I think it would be a good idea to buy something into the close. Remember, we talked about it yesterday. And I was saying, not me, no way, Jose, the way those last two bars looked. Yeah, so that would be ideal. But as always, we'll trade what we see. And as of right now, nice pre-market stabilization, and see if this can hold these pre-market lows. All right, on stops, you just got to use 30-minute lows on things. You just need time to assess. You can't bang out of something gapping under your stop right at the open. I mean, you can do whatever you want, but that's our general strategy. I know of here, $40 earnings, gap breakout here on the weekly too. Synapse, this, well, I only see one print up here at 304. But if it were to print up there, that's relative strength stock of the day so far. Keys, there's no prints. NVIDIA, earnings up. These are all earnings here. Up a tiny bit. John, some people might. It stopped at the 2x yesterday, but we're in a couple other things gapping below. Square, we got the 255s, so it's still $2 out of the money for tomorrow. MA, we have the 355s. So, I mean, we're hanging on. No, that's not true. We got the 350s. The 357. Actually, we have an open profit in MA right now. On Daku. Oh no, Daku is a short watch of mine. Roku. Roku gapping down, and we got the 340s. So we're like in hold our breath mode right here on some of these things. Yeah, we're in Netflix too, but that one's far enough. That one doesn't bother me. We got the 505s for tomorrow, and we already are out half at, I think, 20 cents yesterday. So that one looks fine. Yeah, Greg and I noticed Amazon's changing their business model a little bit. Like they're going to start opening stores. And you know, when you see a change like that in a very successful business after, I know it's well off its all-time highs, but still, it always just raises the question, are there business people now scratching their head looking for other ways to continue growing? You know, I see Kramer, you know, I tell you when I like his comments and I tell you when I just think they're idiotic. And he's on the TV today saying, Google's an unbelievable value right here. I'm like, come on, man. You know, this thing rallied 1,200 to 2,700. Climactic sell setup on the monthly, and you're telling people it's an incredible value. I just makes no sense.
Maybe it hits 3,000, Dan, before it tops out. It is climactic, as you say, on the monthly, for sure.
But
no, I'm just saying a whole number, maybe.
Let's see, where am I? All right, Cisco here. This was one we sold puts, purposely holding over earnings. We sold the 52s, and we already were out of half. And I remember saying yesterday, if you didn't want the gap risk, you could have closed it at 17 cents. So it is gapping down. I just tightened the stop. Did I give it to you all? I'm not sure if I posted it here. So even if we get stopped out, if it goes there, 52.72, which is this July low, that we'll still make money because we sold them for 72 cents and they expire tomorrow. But there's no new setup there. It's, you know, had a breakout failure, double top, gapping down, nothing to do with it now. They're gonna, yeah, Steve, I don't know the whole story. This is an incredible trading range of strength. You know, it's kind of too big to be a traditional flag pattern, but flag pole, an amazing trading range. Now it's gapping up from a, you know, recent IPO, so that's strong. I have no idea what they do. Bisco, gap, another recent IPO, gapping down. It's a bearish gap. 30-minute low, maybe day trade. BBWI 63 and change. Let's gap into a big mess. Red Robin here gapping down. That looks lower. That could go to 20 bucks. So there's a short watch. I'll put that in the window. RRGB. Spartan. No pattern. Tapestry. Down a little bit. No pattern. It's right here in the gap fill, down 5 days. PFGC. No pattern, it's a mess. Wolf looks horrible. Downtrend, gapping down a little bit. I'll put that in a window for another, you know, shorts are going to be harder, but these are earnings things, and we'll just see what they do in the first 30 minutes. Echo Lima, kind of flat. We'll come back to you. Bravo Juliet's a mess. We'll come back. Zynga, nasty gap here, stabilizing, but now it's gapping lower. That's a mess. I noticed Fiverr also. It had a nasty gap here. Look at that. Hey, Greg, you know, another retracement concept. This just would have been a different flavor to talk about. I should have. I'll put it in my notes for next time. But see this, when you get a big old gap like this, the percent of retracement also obviously tells you something about the strength or weakness of it recovering. So my point is, notice it could only, it only bounced like, I don't know, eyeball it, like 3%. It could only, you know, bounce 3% into this and then just going sideways. So that is very weak. And then multiple time frames, you got a bear 1, 2, 3. So yeah, that was ugly. Yeah, Amazon too. Amazon bounced a little bit more, but yeah, same concept. From here to the top, you know, to the top of its retracement was weak. Sure.
What's another sign of being very bearish is most of the time those gap downs, when they do recover, like I would say a normal amount, they would recover to the first swing low to the left and where sellers would be, and they couldn't even get there. Neither one of those stocks.
All right. Well, that's,
yeah.
No, I never picked up on that distinction.
Yeah, I mean, that's in the gap course, you know, we're looking at intraday patterns, but that's exactly the type of like gap down, and we look, you know, look to the left to that type of, you know, on an intraday chart as a reference point, because the gap creates a void. So, you know, what's over there is our first reference point where sellers will be, and majority of the time that's where they show up.
Yes, Sebastian, of course we'll monitor it. But as I said, I said our approach is 30-minute rule as a general rule. But you know, we do nothing here for a few minutes. We need more information. Look at this GRVI blasted yesterday. That would be a wonderful you know, 1, 2, 3, 4. Bumble, let's keep an eye on that for a put spread. Alf had a nice move yesterday. We'll keep an eye on that. Kohl's had earnings, no pattern. Macy's earnings gapping up. We'll keep an eye on them. Hood had earnings. Gapping down, no pattern. All right, Baba. I mean, I don't know what to say right here. It's bearish. K-Web's bearish, but I see the broader markets here at least turning green.